Hi everyone, welcome to Weekly Outlook number 10. I can't believe I'm already on my 10th one, but for those that don't know, every week I like to go over what the market did last week, see how it reacted, and see what really moved the market. And then I like to just share my opinions, my thoughts, and trade ideas that I'm looking to take in the following week. I was pretty hands-off last week as far as generating new ideas. 2 weeks ago, I called out that I was going to be going long euro dollar, going short dollar yen, dollar Swiss. And so I had those positions already in place 2 weeks ago. And so this week and last week was more of just managing those positions. And it wasn't until Friday that I went ahead and took profits on most of my positions and cashed out and realized some P&L. So I want to go over why the market did what it did, go over my successful trade ups, and also just want to go over what I'm looking to do in the following week or 2 weeks. Because I think we could see some continued momentum, but then we also have to be cautious because most of the currency pairs that I look for are now at these zones, these where they've been respected previously, where they can react and actually kind of just flip positions. So towards the end of the week, the market actually saw some optimism and risk on. A lot of the optimism was fueled by Trump's delay in tariffs. And now I kind of realized that I've been saying Trump a lot in my videos, and that's because he's a big market driver in this environment that we're in. Since the beginning of the year, there was a Trump trade, basically going long dollar, going long Bitcoin, very optimism. He was very pro-business in his policies, but now the market has shifted a bit. So now that he's implementing these tariffs and whatnot, the market actually saw a risk-off approach. And so most of those Trump trades that were in place actually faded off. So now we're in a position where he has these 90-day tariffs in place. The market is feeling more optimistic about it for now. And it's just a matter of making sure that that sentiment stays in place and those things do go through. And if we see some reduced uncertainty, then we can see some continuation in risk on assets like the stock market, Bitcoin, and then you might see things like gold kind of taper off. Safe haven currencies like the yen and the Swiss might also taper off. So it's very important to be mindful, especially in this environment. It seems like when I'm at my desk, as soon as something hits the news terminal that can contradict what's currently in place, the market tends to move really fast. Like I remember when the initial 90-day tariff pause came out, the market went ahead and rallied really quickly. And within 30 minutes or so, someone went ahead and said that was fake news. And so all that movement kind of just faded back down. So let's go ahead and look at the fundamentals of the market, see what institutions and asset managers and big money went ahead and bought. And then we kind of just look at the technicals and see how we can kind of move forward. So just looking at the latest buys and sells for bigger players in the market, we do see that there was an appetite for yen. So risk off currency right here, yen, saw a 5% net change, increasing their net position. Swiss franc got the same treatment, more optimism and more appetite for risk off currencies. Saw a 3% net change there. The euro also was sort of a safe haven. That's why I chose that pair 2 weeks ago. Given that they had some increased spending in their government, they were going to commit $500 billion or 500 billion euros, into their defense spending. Euro really saw that and liked that. So that's why with that strong momentum that the euro had, I chose those out of the other currency pairs to go ahead and go long against the dollar. So euro saw a 1% net change. Then we see dollar got sold off pretty heavily here, minus 3.56%. They went ahead and removed 4,000 short contracts, but on the other side, on the flip side, they went ahead and removed 8,000 long contracts. So that's why you see that negative pressure for the US dollar. Real quickly here, retail sentiment, basically the positions of the retail trader. It's important to keep in mind though that the retail trader, like you and I, for the most part, they are on opposite sides of the trend. Retail traders usually like to short tops and buy bottoms instead of going with the trend. So we see that dollar Swiss here, 88% of retail traders are long dollar Swiss and only 12% are short. Now, if you look at a dollar Swiss chart, you're going to see that it's been selling off aggressively, meaning traders have been trying to buy the dollar Swiss but have been getting wiped out pretty consistently. Same thing with the euro dollar. 26% of retail traders are long and 74% are short. So retail sentiment is a good contrarian signal that I like to take. I usually want to be on the opposite end of these. Now I know that this kind of varies day by day. So this is not like the only indicator that I use. But looking at sentiment is very important. One thing that I wanted to highlight, although I don't actively trade the stock market, but put to call ratio as of April 8th, right? And if you look at a chart on the S&P, that's pretty much when we kind of flipped around. Premiums were really high for puts, right? People were shorting the stock market. And so when you get on these very extreme levels, that's when most people try to hop in the market, and they're too late by that point. So when you get these extreme levels, that's when you go ahead and see reversals in the market. So for this week, I'm actually taking a very passive approach when it comes to trading, because I was in some positions that I already took profit on, and we're at this level here that it's really interesting to see what's going to happen. So we clearly broke out very strongly and we closed way above this resistance level. So in my previous videos, I was saying how we were basically in this big range and how I wanted to see how we're going to react once we kind of break this level. My original idea was that potentially we can probably bounce off of this level and then continue trading the range back down. But it seems like we have some very strong momentum in the euro dollar. So the trades that I took, I'll just go over a very brief overview. If you kind of reference my previous videos, I went long whenever we got this trend line break here on a very low technical basis. We had this downward trend line. We went ahead and broke it, retested to a T. And so that's when I went ahead and entered. And along the way, I added to my position. So I got trailed out also eventually right here. But then once I saw that we held this level again, I actually went ahead and added some more positions. And so I had a nice trade on the euro dollar. I got stopped out. My original target was the 112 level, and we broke way past it. And we've stayed above it now very strongly here. We had a really nice close for the week. And so now I'm a little skeptical. Is this going to be a fake out and we just continue back lower? Or is this one of those things where this level of resistance now turns into support? I do anticipate a pullback to the 112 level. And I want to see, do we hold this level, hold it, and then continue upwards? Or do we get a fake out and then continue back lower? That's really up to market sentiment. Just because this market is very volatile and there's a lot of things at play that are really moving the market, you kind of have to be very mindful. And so I'm going to be very passive in my approach. If we hold this level, similar to like this, where you get these brief pullbacks and you hold it really nicely, then I'll consider buying into this level. And then I'll probably target something like this. We can target this level right here, which is at the 1.5, and then you can start to look for above. That's how I would approach it. We actually almost already went to this level. So if you kind of just stretch this out, we reacted off this level. So that would be really cool to see if we get this pullback here and we get to it again and we hold. This could be one of those trades where you just let it run and then get trailed out eventually. That was one of my trades that I took. I'll just go over the other one that I called out on my other video. Similar situation to the euro. Trendline break. We saw some continuation. I added to my position. But one mistake that I'll admit I did was I forgot to go ahead and put my take profit lower. So I actually got stopped out prematurely. It was still a nice profit. It was like 172 pips, but I made that mistake. It was a really volatile event. This was April 2nd when Trump went ahead and caught out those tariffs. That's okay though. You live and you learn. So this week, I'm actually going to be very passive. In fact, I'm going to see how these levels react. And I won't really place any trades unless we get some very obvious momentum. Because if the 90-day tariffs kind of just stick in place and deals start to get made, then the appetite for these risk off assets are actually going to go away. And so there was some brief moments last week where those hints were thrown at the market, and when they did happen, things like dollar yen, dollar Swiss went ahead and appreciated really fast. So I want to take this week to be more, I'm going to be more risk adverse, just because I already had a very successful last week and I don't want to jump the gun and do anything crazy. We see that dollar yen, they close in the red below this candle, but we saw a really big wick here. And so I want to see if, maybe we can get some continuation to the upside and see if this is going to be one big fake out or not. The euro as well, I want to see if this breakout is something we can count on. Let's say we go ahead and see some risk on. So we see some continuation in things like the NASDAQ, risk off assets are less appetizing. Then what I would like to see is something like dollar Swiss. Now, if we look at a higher time frame, I'm on the weekly here. We see that we're at this level of support. this could be a very attractive level for a long-term continuation to the upside. Kind of just looking over here, we were in this range for, let's see how long we were in this range. 750 days we've been in this range. So we could be, right, relative to the past couple of years, are in a very discounted level. And if we kind of see some continuation in risk on sentiment, I could definitely see this thing kind of ripping back up to at least the top of this level here. Thank you for watching this weekly outlook. I'm going to be very passive this week, protect my profits. Let's see how the fundamentals and sentiment play out. If we do see continuation in deals being made and the 90-day pause on tariffs is actually successful in getting deals done, then I could see some risk on appetite and see things like the NASDAQ and the S&P 500 being more bullish. I could definitely see things like the yen and dollar Swiss becoming a little bit weaker as the market is more optimistic in the US and the growth that it's going to come. Thank you guys for watching. I hope you guys have a blessed one and happy trading to all of you guys. Bye-bye.